Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 10th of October. Certainly the narrative hasn't changed in what markets are concerned about. That being said, it's the first week of a new quarter, and it looks as though markets generally may have a positive week. Having said all that, of course, we are still talking about the Fed pivot. Will they, won't they? There are some in the market who potentially are working under a false apprehension that perhaps some of the economic data coming through is showing that the interest rate hikes, which the Fed has been aggressively pursuing, are starting to have some effect. For its own part, the Federal Reserve has very much stuck to its guns that it will continue this policy, not only until inflation has been tamed, but also that it's been shown to be tamed over a good few months. So the likelihood of rates being higher for longer is something that the Federal Reserve keeps beating down to market participants, even if some of them aren't listening. In terms of the UK, of course, we've had a particularly volatile time, especially around sterling. The FTSE 250 has come into focus as being a barometer of the UK economy. And if you combine that with government spending plans where we've yet to get some flesh on the bones, as I say, the sterling weakness and some generally weakening economic data such as retail sales, let alone the potential for lowered house prices, the FTSE 250 in the year to date is down 25%. Now, in terms of the fact that the markets may have had a generally good week, they have, of course, got a lot of ground to make up. In the year to date, the Dow Jones is down by 18%, S&P 500 21%, Nasdaq 29%, and the FTSE 100 by 5%. Turning to next week, there's a couple of stocks which themselves have been undergoing some problems for different reasons. We have a third quarter update from Entain. This is a FTSE 100 company whose brands include the likes of Ladbrokes and Corals. Despite the fact that they have enhanced a number of their products, they have also therefore increased customer activity. They've got a good diversity of brands and geographies, and of course in terms of US expansion they've got a joint venture with MGM Resorts. The shares are down by 47% over the last year, perhaps not surprisingly given the overhang of the cost of living crisis and also of course the regulation which tends to dominate the sector as well. easyJet is having a trading statement next week. Shares here down by 54% over the last year. And again, this is despite the fact that revenues, when we last heard from them, were higher than expected. Bookings and therefore capacity is on the increase, potentially even to somewhere near pre-pandemic levels, and they're also getting more income from ancillary products such as food and baggage. That being said, again, the cost of living crisis, how much spare cash will there be for foreign holidays? The Russia-Ukraine situation certainly not helped general travelling around Europe, and of course there has also been pressure of higher fuel prices. Shares down 54% in the year to date. easyJet currently in the FTSE 250. It'll be interesting to see whether they're seeing any improvement in fortunes. Thank you for watching. Have a great week.